Everybody, welcome back to the channel. Portfolio is sitting at about 1.127 million USD right now. So in this video, what I'm going to cover is that I'm going to cover how the plan is from going from a million to basically $10 million in stocks. The time frame will be about 5 to 10 years. This is extremely aggressive also. We'll see what happens. I have no idea what's going to happen, but there's a reason why there are certain companies where you can invest, some companies where I can't really invest in order for me to actually achieve my end goal right here, right? So companies like obviously the big tech companies, they've already gotten too massive and too big. So it's not that I'm going to actually completely sell away my big tech stocks. For example, I do have a S&P 500 fund in my pension, but I don't touch that at all. And then I have Google here, and then I have Amazon here as well. But they're very, very small positions. They're about 20,000 and then 27,000 right here. Previously, this position was about 100,000 right here, about 100,000 right here, and then it's like somewhere like 90 something thousand in Amazon. But I sold off quite a bit as well. I sold off a lot of Microsoft as well. I sold off my Facebook, and I sold off my Nvidia as well. Yeah, it's not a dumb move. It's just more like at that point in time, yeah, it was the correct decision, I felt. Yeah, and yeah, we always make mistakes, but it's fine. And then what types of companies that I'm generally gonna buy. So like I realistically, this is a very aggressive goal, right? This is a 10x on a entire portfolio in 5 years. And yeah, in the public equity markets where there are finance managers and stuff like that, there are hedge funds running ships and stuff. I can't necessarily outperform them. Or I technically can, but being able to basically 10x is really a stretch. But let's see what happens. Put it on YouTube and then we see what happens. Okay. Okay. So the types of companies that I think that I'm going to be buying. Feel free to give your comments on this, whether I'm wrong or not. But I need to be buying high growth companies, and I also want to be buying smaller companies. So how I look at it is that anything more than 50 billion, for example, is probably too big for me to see the returns that I want. It's not that it's a bad company, it's just that it's hard to see the returns, right? So how I'm thinking about it is that if I buy a $5 billion company, for me to 10x my money, it needs to go to $50 billion, essentially, right? And yeah, it's way easier to go from 5 billion to 50 billion than from maybe 50 billion to 500 billion, right? This is like very few companies in the space actually get to 500 billion. So that's probably a bit unrealistic. So how I see it is I need to go and get smaller companies, but they are growing much faster. They're growing much faster, right? So it's very easy for a fund, for example, a fund, right? A hedge fund, they have like $3 billion under assets under management. If they just put in, for example, $200 million into this position right here, it's gonna move the stock quite a bit. It's gonna move the stock price, right? And we're able to see those gains quite easily and stuff like that. Okay, so that's the first thing. The second thing is that with about $1 million liquid or so over here, right? I need to be making concentrated bets. I don't like buying like a ton of companies. If I buy too many companies, I can't focus on the companies, and then I don't understand the company. And then also my returns are going to get diluted. What I like is the Bill Ackman approach. So if you did not know Bill Ackman, right, they just buy, I don't know whether it's like something like 8 to 20 companies or so, and then they just hold all of their positions in those companies. And then yeah, they basically their returns are also compounded, right? Because if you have a winning company, you can grow the portfolio very, very fast, basically. So what I learned is that in the past, you can see, right, a lot of my gains right here come from one, two, three, basically very concentrated positions. A lot of the other stuff right here, you still get gains, but it's like you don't really gain much. It doesn't move the needle, right? We're gonna try to do things that really, really move the needle for us. Okay, so how I see is that there are gonna be 3 or 4 winners that we are gonna have to pick, and then those really generate most of the money right here, right? The 80-20 rule, right? They call it the 80-20 rule. Okay, so how I see it is that if I am able to put in like 60K or even a 200K on a position, right? I'm so convicted that I put in 200K, for example. If this thing 4x's, for example, it goes to 800K, right? That is kind of like life changing money, right? It's like $600,000 in gains, right? However, if I put in 60K, it goes, if a 4x, right? It goes to 240K, right? It's okay, but it doesn't change life. Does that make sense? It doesn't really get to the goal really, really fast. right? So I need to be concentrated in my positions, and I need to be highly convicted that this thing works, right? And of course, that comes with risk. If you put too much money into one specific company, then your risks basically get concentrated in that specific company as well. Okay, but yeah, I'm comfortable in doing this, but I need to research the company thoroughly as well, right? So I aim for entry and exits of 3 to 10x, and anything that is outperforming the market, I'm actually pretty happy. So I do know that the market performs anywhere from like 7 to 30% every year. Some years they also go negative 20%, negative 30%, right? But as long as I'm beating the overall market, I'm actually pretty happy. I'm actually okay with just doing a 1.5x, but it beats the market. Yeah. If the market is like it's just up by 10%, right? I beat it. I definitely beat the market, right? So I'm okay with those types of outcomes as well. Okay, so yeah, I'm really aiming for a 3 to 10x, right? I'm okay with 3x, but imagine if you put 100k in and you have a 3x, that's a 300k, so you have a 200k profit, right? That is not a bad outcome at all, not a bad outcome. Yep. Okay, and yeah, I'm able to actually hold for 2.5 years, 2 to 5 years or so, and I'm actually comfortable holding longer if the quality of the company is there, right? So for example, like Microsoft, like why would I ever sell Microsoft, right? Um, why would I sell Google? If I sell Google, it's because like they just stop being dominant in search advertising, and like they don't have AI engineers and stuff like that. Yeah. Okay, so like they're just some companies you just don't sell at all, or like you don't sell fully out of the position. You can sell for cash, but you don't sell fully out. Yeah. And then obviously the larger it gets, the better the margins. What do I mean by that is that for example, like Nvidia, right? For example, Nvidia, like the larger they get, um, yeah, they just have more negotiating power with their suppliers, and then they can push the price down. I mean, common sense business stuff, right? The other things like category of one companies. So category of one companies are like, for example, Palantir, right? Nobody is doing like data analytics, CRM plus CRM software in a box. Basically, that's basically what they are, right? Nobody else in the market is doing that. However, for example, other companies like MongoDB is a database software, right? There are a ton of other companies that are probably also database software. So it may be a bit difficult, more difficult to to say yes, I'm investing in this company, because it's like I'm not very sure what the edge or the competitive advantage is, basically, right? So category of one companies like Nvidia, right? Nobody has their chips. Nobody has their chips. Or like Reddit, for example, like nobody else has the largest forum in the world, online forum in the world. Like nobody else has, right? So these are, I would say, category of one companies that, yeah, because they're so big, right? They just keep growing bigger, and they are the clear winner in that category. Yeah, if that makes sense. Yeah. The next thing I'm looking for is like I need a clear growth story, right? So recently, there's always been the AI trade, there's the crypto trade and stuff like that. And for example, in healthcare, for example, I know about the healthcare trade. It's like that one is like the GLP one, the obesity story. Um, so America has a lot of obese people, right? Obesity story, or like people are getting older, people are not having babies, right? So then they basically have to yeah, they basically have to like live longer. So the longevity story is a very big story. Yeah, people are not having babies, so they just want to have high quality of life, standards of life. Yeah. Okay, and this has to be, basically the narrative has to be now, or in the next 3 years, right? So the AI trade is basically the data center trade. So the data center trade is basically people are gonna buy a bunch of AI chips. They need data centers, and so the data center stocks are basically running up in the short term. Yeah, right. So this macro story needs to be true, and that's basically what's gonna move the stock price. Basically, if you don't have a story, people are not gonna buy your stock. People are not gonna buy your stock now. Yeah, and it does not always need to be in technology or healthcare. Okay, so in the past, I think I made the most gains in technology and healthcare, but I don't think it always needs to be. As I've seen, for example, PopMart. So PopMart over here is the Labubu craze. Yeah, like just by having a story, they just have been able to grow their stock, their company by from, yeah, basically 245%, right, over the past 5 years also. Yeah, which is a fantastic outcome. Like it went from 11 to 42, which is about 4x or so. Yeah, so I mean 4x is a fantastic result, especially for a non-technology company. I definitely think it's a fantastic result. Yep. And yeah, this has only been what, since last year, 2024, right? 2024 to now is like a 1 year situation. Yeah, it has grown the stock price has grown basically 5x. Yeah. So these types of companies, like, I saw this as well. I saw this trend as well, and I just didn't do anything about it, which stupid me, right? So I saw like Lisa have the Labubu stuff like that, and yeah. And then there's another one like Hello Kitty, for example. Hello Kitty actually, I didn't understand how big it was. I don't understand how big IP is until I saw these two companies rise up. Right? It's like if you have a dominant IP. So in this case here, Sanrio owns Hello Kitty. They just own licensing revenue, and so they're able to grow their earnings over time. And so, like, if you just bought this 5 years ago, right, 592, and then now it's sitting at 7,000. So what is that? Yeah, basically a lot of money. So like almost a 10x, right? Basically a 10x, in your outcome, which is a fantastic result, right? Fantastic result. Like, imagine if you just put like 200K into this thing, right? You just wait 5 years. This would have been, yeah, $2 million basically. Yeah. And so like this is the type of company that, like, yeah, I probably should be looking into stuff like this because it's really going to move the needle. And yeah, this is interesting to me, right? If you hold 5 years and then you go from 200K to 2 million, that is amazing. That's an amazing outcome, right? Anybody will love that outcome, right? So yeah, that's what I mean by concentrated bets. Okay, so this is what I think I should be doing. Feel free to give your opinion, but this is what I've seen success within my own investing journey, and of course, everyone's interest a journey is different. Um, yeah, so if you have any, any stocks that you feel that you like me to cover or need me to research and stuff like that, or if you disagree on my criteria and stuff like that, for this goal, for example, right? Yeah, feel free to just let me know in the comments. I always read all the comment sections and stuff like that. Yeah, thank you so much for this video, and yeah, see you in the next one.